How's it going, you guys? Today we're going to be talking about the Ichimoku cloud. I told you guys I'd be doing a video on it pretty soon since a lot of you guys were pretty intrigued on it. So might as well just do that. We're going to go over the Ichimoku, what is it, how to use it, how I use it in my strategy, the do's and don'ts. The Ichimoku cloud, it's amazing. Some people just use an Ichimoku and that's all they do, and I could see the reason why they would. That being said, it is a wonderful tool to have in your bag of indicators. Remember, same warning goes for any indicator that I'm going to do a video on. Indicators are just indicators. They help you see a vision. They do not show you the entire vision. All indicators are laggy, and no indicator on the planet can take into account for what volume can do to price action. So that is a little warning. Remember, it doesn't matter if it is a Watson, it doesn't matter if it's EMAs, it doesn't matter if it's an Ichimoku, it doesn't matter if it's the gigawatts and Flugtubin Flobinator or whatever it is. No indicator can foresee the insanity that is the crypto market. So we're going to go into the Ichimoku, but before we do that, if you haven't already subscribed to the channel, every person that subs to the channel helps get a little exposure out there, and maybe somebody can watch this video and learn a thing or two from it. And if you are not part of the Discord, 7 years of bad luck on you and your family. No, I'm just kidding. Join the Discord. It's 100% free, absolutely zero paywalls, daily market updates, learning resources. It's a lot better than 99% of paid Discords out there. Signal groups suck balls, so do yourself a favor. Join a community that actually cares about profitability without that weird incel dick measuring energy. All we care about is making money, you guys. So join the Biscuit Box, link down below. Without further ado, let's get into it. So let's talk about some of the history of the Ichimoku, because it's pretty interesting. In the 1930s, a beautiful legend, absolute fucking unit of a human being. You can see him right here. He's on my charts. This man's name is Goyoichi Hosoda. This man used to trade the Japanese stock market as well as the rice market. And back in the 30s, as you would imagine, there wasn't really much in the way of indicators or in the way of a trading system. Sometimes you would get charts on paper, you know, and those paper charts used to come with maybe a couple moving averages, maybe some support or resistance indications, maybe a momentum indicator or two. But other than that, there wasn't a whole system in place that was developed yet that could help people see all three. And that's where this beautiful fucking man came into the fold. He spent 30 years of his life creating the Ichi. And just to make it faster, I will be calling the Ichimoku cloud the Ichi in this video. So you're going to hear the Ichi a lot. So 30 years of research. I mean, like, when Japan was fighting World War II, this guy was sitting there making the Ichimoku cloud. This man was able to create a indicator that not only saw the direction of trend, it could see the equilibrium of price, it could see areas of support and resistance, the strength of the move, and even the support and resistance in the future. He called it the Ichimoku Kinko Hayu, or the one glance equilibrium chart. And if you are one of those people that just wanted to stick to one indicator, this definitely would be one of those things where you could take one glance at something and you could definitely get a whole lot of information. So let's get into it. So I like to think of the Ichimoku as a rolling band of support and resistance that tells you whether or not your asset is still moving bullishly or bearishly, while also giving you an area that tells you where your equilibrium or your indecision point lives. If price is trading above the Ichi cloud on the time frame that you're watching, the price action is tending to move more bullish. And if price breaks below the Ichi and fails to get back up above it again, the price action tends to move a little bit more bearishly on whatever time frame you're watching. So now let's talk about the different parts of the Ichimoku. Firstly, we have the cloud itself. Usually, if the price action is above the Ichi, the top layer is this leading span A or the Senku span A. Now, the leading span A is what I like to call soft support or soft resistance. If the price is above the Ichi and goes down to the leading span A, this is going to be soft support, and it's going to act as a test. If we can stay above it, and keep above it, we tend to keep going up. But if we break into it, we're going to have a little bit of trouble. So for those of you watching, it's usually the first sign. As you see here, if the price action is below the Ichimoku, the leading span A is usually the first price we touch for a test above. Then we have the leading span B. I like to call this hard resistance, hard support. If price action is above the leading span B and we break below it, that's where the price action tends to go a little bit more bearish and we extend a little bit more down. If the price action is below the Ichi and we go into the leading span A, we have to break above the leading span B as it's being used as hard resistance, or else we reject again. So the leading span A and the leading span B come together to actually make the cloud, which is called the Kumo. The cloud, or the section between the leading span A or the leading span B, is always your equilibrium zone / indecision zone. Your cloud will always tell you, depending on whether or not you are trading above it or below it, whether that time frame is acting more bullish or bearishly. So if you see back here, you can see how we broke out of the cloud and we kept on using the leading span A to bounce off of until we got up to 73, and then we started breaking down and we hit the leading span A through the leading span B and went down a little bit more. So you can see here, as long as we're bouncing off the cloud, we go up. But once we break below the cloud, there are issues. Now, to go back up, usually we have to go retest that cloud and then break above this, the leading span B, which is hard resistance. Now, we didn't, and we rejected and went down a little bit more. Now, something to look out for are Kumo flips. Whenever the price goes up for a little bit and then we have like a debilitating drop, if there actually is a flip in sentiment, you'll see how the cloud flips itself. Now, instead of the leading span A being on top, it crosses and the leading span B is now at the bottom, showing that the bears have control in sentiment. This was support, and now it flipped into a band of resistance. The Kumo flips are a good way to show on any given time frame if that time frame sentiment has flipped. A little later, I'll show you how to use higher time frames to show whether or not you're going to go into a bull or a bear market, but that's a little later. Next, we're going to go over the Ichi baseline, or the Kijun Sen. The Ichi baseline is your first guardian for the Ichi. It tells you whether or not the sentiment is going to continue or it's about to change a little bit. As you can see here, as we started going up, anytime we got close to the Ichi baseline, we either used it as support to go up or we just bounced off of it. That is a good sign that the asset that you're watching is going to keep going up. But as you can see, sooner or later, we went to that baseline and we broke through it and we couldn't get back above it. If an asset is trading above its Ichi baseline, it tends to move more bullish. Once the asset goes below the Ichi baseline and can't get above the baseline, it tends to move in a little bit more of a bearish wave. So Captain Lord Hosoda, the one that created the Ichimoku to be a system to be used on higher time frames for overall sentiment. But that does not mean you cannot use it on lower time frames. You can actually use it as a laddering system, and let me explain to you how. If you've been watching my stream, you know the importance of higher time frames, and you also know the importance of looking out for micro, medium, and macro time frames as well. And one of the things about the Ichi is it develops. So the Ichi on the 1 minute will develop into the Ichi on the 3 minute. The Ichi on the 3 minute will develop into the Ichi on the 9. The 9 will develop into the 27, and so on and so forth. So let me give you an example of how that works. You can see here we're on the 1 minute chart. We kept on using the Ichi to bounce up off of it until we got up to close to 74, and then we started going below it. Once something goes below or into the Ichi cloud and below it, it starts moving a little bit more bearishly. Once we got below the Ichi cloud leading span B, there is not much for you to see in the way of where we're going to go unless you have some support and resistances lined out. So one of the things that you do is you go to the next time frame. So you can see here on the 1 minute, and this is the only thing I ever tell people to look at a 1 minute chart for. I do not recommend looking at a 1 minute chart when you trade. 1 minute charts are for fucking NPCs and the poor. A better trader than me, when I was learning how to trade, told me that the time frame you trade on is directly correlated to your wallet balance. If you trade on low time frames, low wallet balance. High time frames, high wallet balance. But for posterity's sake, and I'm giving an example, this is what I'm talking about. So as you can see on the 1 minute, we're going up, but once we break that leading span A and break through that Ichi cloud, we now have this little zone. So if we put a line right here, you can see how if we switch to the 3, go back to that area, it now shows us having to deal with this 3 minute. And if we break that 3 minute, we then have to deal with the 9. And so on and so forth. Remember, the lower time frames can help you with continued momentum or just micro movements, but where the Ichimoku really does shine is the higher time frames. Oh, for overall sentiment, we're watching the 9-hour chart. I like the 9-hour more than the 12-hour, you guys. I'm going to make a video soon about irregular time frames and why to use them, so look out for that in the future. But as you can see here on the 9-hour, we're moving a little bit more bullish. We topped out around 126. We started breaking, and then we started a very continued dip down. Every time we got above the Ichi, we stayed above it for a little bit before we started dipping back below it. Basically, every time the bulls have a shot is when once we go below tough, we start breaking above that leading span A and we try to break out of that leading span B. Now, if we do go bullish, it would be breaking above the leading span B as we try to go up. That is our chance. You can see here how every time we broke above that Ichi, we started trying to go up a little bit more until the bears showed up and pushed it down. They pushed it down below the Ichi on this 9-hour, and then we had another deep drag. Now that we've consolidated a little bit and gone sideways, we've given this enough time for the price action and the support band to show that we are, in fact, creating a little bit of support. And now we're trading above the 9-hour Ichi again. Now, if we go down and blast below 69.8, there's a good chance that we have to go retest the bottom of that leading span B, and that is 68.2. 68.2 needs to stay as support because now, you know, price below Ichi, this is resistance. Now that price is above it, the Ichi now is acting as that rolling band of support. So there is a good shot for us to bottom out if we can keep that 68.2 zone. Break below it, we start another little run down. Most likely this Kumo flips again and the bears have another shot. So right now the bulls are doing some good work. Just price action wise, we have been creating a series of higher lows. So that is good. We are now, you know, as thin as the Ichi is, we are now trading above it. So there is a shot for up as long as we can keep this area as support. And that helps out a lot. If we were to line this out and go down to a lower time frame, we still need to keep this area. Yeah, as long as we can keep this zone, we can print a higher low and keep going up. Higher time frames on Ichimokus can really help you with your entries. I don't recommend using Ichis to enter unless you are either trying to enter at the top of a boundary or a bottom of a boundary. Let me find a spot inside of an Ichi. You never want to grab a trade inside of the Ichi boundary because that's where we get a lot of yip yap. Price likes to rocket up or shoot down really hard. Inside of an Ichimoku is always indecision. Not only that, but something to look out for as well is whenever we get into areas, especially on higher time frames, where we see super thick Ichis like this, there's a good shot that the price is not going to want to go through an Ichi this thick, because that would mean that like, just like a plane, if we go through this thick cloud, there's going to be a lot of turbulence and it's going to be insane. So if the market gods were nice, we would try to go down a little bit and probably use this Ichi boundary until we came down to this area, and then we went through somewhere a little thinner. Especially with this daily looking like this and Ichimoku this thick, that shows me that there is a giant band of overhead resistance that is capping out around 79K. Always pay attention to an Ichi, especially on a higher time frame, whenever you see a thick giant boy like this, because there's a couple things that can happen. Sometimes we go to an Ichi and it's super thick like this, and just like a plane or a pilot, I like to think of the price action like a plane, the Ichimoku like a thick storm cloud, right? And sometimes it's so thick that the pilot doesn't want to go through it because they know there's going to be a lot of turbulence. So what the pilot does is they divert route and try to go somewhere a little bit thinner. As you can see, I'll show you here on our 9-hour. Last time we did that, I believe it was around here. You can see how we have a thick Ichi. The price went up to the leading span A, decided I don't really want to do all that, so we stayed down a little bit more until we found a thinner portion to then try to attempt to go up. Thick Ichis are very hard to get into, and not only that, but when they're on higher time frames, you see a whole lot more zigzags, you see a whole lot more chop markets and a lot more scam wicks, especially within that boundary. So one reality that might happen is whenever you get to that thick Ichi, the price action goes down in favor of trying to get to somewhere where it is a little thinner. But if we do go into this thick Ichi, I highly recommend never trying to take in a position while we're inside of the middle. Always wait for it to try to go up and retest the leading span B. As you can see here, we got to here, hit that leading span B, and rejected. So you'll always either find a position near the rejection on a leading span A or a leading span B for shorts. For longs, it's just the opposite. We go up and we keep either the leading span A or we bounce off that leading span B. And you'll know whether or not it's a good position because you'll reach that apex. Your RSI will either reach overbought, oversold. The volume flow will either kick in with some volume and will stop around those like areas you charted. And if you're lucky, an area you charted will line up with one of the cloud edges, basically. To get back to what ifs, if we do go up into this Ichi cloud and then we stop around the leading span B area, there's two options. Either we start another rejection because this area is acting as resistance, or we blast through it and we go up a little bit more and maybe we go retest this 80K, 84K zone. But if I was to try to find a position based on higher time frame Ichis, it would always be either the bottom or the top of a cloud and never inside of it. So now that I've yapped about the Ichi for a little bit, I want to talk how I implement it into my trading strategy and how I would use it to gauge momentum and everything, not to get myself wrecked. So let's just say I was able to catch this long right here around 65.6 and I wanted to ride it up. There is a bull div that formed right there. I would definitely try to long it right there. So let's say I jumped in and it's starting to go up. One of the ways I know how we're going to go up is if we regain the baseline. You see here how we're moving down. We keep on going to the baseline and rejecting it. Baseline, reject, baseline, reject, baseline, reject. We hit this higher time frame support. We bounced and then we started breaking above the baseline and using the baseline to bounce until we got to a certain level and then we rejected it altogether. So over here, that tells me that we're a lot more bullish because we keep using that baseline as support to bounce up. And then we started getting into a little bit of problems over here. Overall, not the worst, because we weren't breaking levels. We were just chopping in a zone before taking it up again. And you could tell that it was gaining strength, because we were reaching oversold on the RSI and the stochastic while staying a lot higher than last time. So that is a good, that would have been a good sign to take some profit and keep it open a little bit, or reload in these areas, since we were definitely not breaking lower. And even though we went into or below the Ichi cloud regions, the Ichi cloud really didn't start pushing down with the price action. The cloud kind of stayed flat, and we just flipped a whole bunch of times until we got back up and we went to the next level. Now that we went to the next level, we rejected that baseline again. We were rejecting the Ichi span, or the leading span A. We stayed into the Kumo for a little bit. We rejected that leading span B. Stayed sideways for a little bit. Now we popped up above that next little Ichi band, and now we're stuck in this little area. Now, the tops of Ichis can show you where the next little resistance area is, or the next area we have to pop above, or we create a little lower high. Now keep in mind, it's not just business in the front. The Ichi's the mullet of the market. It's also party in the back. So as you move, you also need to figure out these little areas in which the Ichi points to or flattens at, because sometimes those areas can be areas of support or resistance, especially if your lines or your charting lines up with it as well. So I would have tried to take profit up here. The RSI reached overbought, stochastic reached overbought. I would have taken the bulk of my profit over here and tried to short. I did short. So now we're just waiting on it. We did definitely break into some levels a little bit harder than last time to make me a little bit concerned, and we still are hanging out at the top of the shelf that we were in last time, so we didn't really break above yet. This last push down is a little bit more sus than the last one, but with the Ichi, we still are above the line. We're not breaking below it at this moment. This 27 is showing some signs of strength. Remember, higher time frames are more important than lower time frames on Ichimoku's. The man who created Ichimoku's to be a high time frame system, but the lower time frames are valid, since the lower time frames do build into the higher time frames. So this is an example of how Ichimoku's feed into each other. You can see here that we're on the 3-minute chart, right? So if you had entered here on the 3-minute chart and started watching it go up, you could have made a little bit of money, watched it go up until it started to actually break that line, and then break the Ichi to the downside. From there, I would have flicked on to the 9-minute chart. And as you can see on the 9-minute chart, we do have we do have an Ichimoku building itself pretty nicely. And you can see how when we go down, we keep well above that leading span A, and then we bounce. We keep well above that leading span A, and we bounce, even though it's showing signs of weakness on a 3-minute, right? It's not really showing much of anything weak on a 9-minute, because once again, crypto is a bouncing ball and not a rocket ship. You know, you are going to use the higher time frames or how they mix into each other to your advantage. So right here, you can see how the 3 kind of has a little bit more of a violent move to it. That's just the 3-minute dropping down a little bit to refuel and go up, and you could tell by the higher time frame in front of it that is a refuel just to go up. We keep on getting oversold at the Ichi boundaries. We bounce up after that. We don't really break below the leading span B, and if we do, there is an immediate push up into a thin Ichi. So this shows me that at least starting from the 3-minute on, we're building strength. And if we go back, we can see on the 27 how the 27's moving a lot more bullishly as well, since we'd have to drop a whole lot lower to start breaking into things. So whenever you're entering a trade or watching a trade, you can use the lower time frames building into the higher time frames to see if we are in fact building strength, especially when those little retraces happen. A lot of people tend to close their positions out of fear when that happens. And one of the ways that you can see that the overall trend is building is with how each time frame's Ichi's basically Russian nesting doll with the next time frame. So for instance, if like you wanted to see how the 3 was building and you were unsure whether or not that was a top, I would go to the 9 and figure out where the boundaries were on that cloud, and so on and so forth. And once you get to like the higher time frames, you can do the same thing with the lowers. So for instance, you can see how we have a cloud above on the daily, right, showing we have overhead resistance, but on the 9 hour it shows below us we already have started forming a good little band of support. It's not the thickest, but it does show on a lower time frame below it there is some support. So it's about figuring out the different relationships, meaning like if we go up, there's areas we have to blast above, but if we go down, there's areas that we need to at least create some support or blast below as well. So, because every time frame does create its own support, it does create its own resistance. Every time frame does have its own structure. Each Ichimoku does too. So I told you earlier in the video that we can use the Ichimoku to figure out whether or not we're in a bull or a bear market. And the way we do that is this. You open up your weekly time frame and you start looking at what your Ichi is doing. Whenever on the weekly we are above an Ichi, we're bullish. As you can see here, we're trading above an Ichi, we're moving bullish. Ever since October 2023, we moved above the Ichi and then we were moving bullish using the leading span A every time we got close to it as the bounce up. And for close to 3 years, we were in a bull market. Everybody that kept on asking me whether or not they should buy stuff, I would always tell them you should figure out how to sell. We're in a bull market. And when we got to this level, people were like, oh, alt season, alt season. I was telling people we're getting pretty, we're printing series of bear divs while being well over the Ichi for 3 years now. If you think that there's going to be a more continued push into this bull market, you're gonna be sad. And what happened? We hit 126 and we started shitting. Once we started shitting, we got close to that Ichi boundary. Now, whenever an asset starts trading within that weekly Ichi boundary, this is how you know you need to start being scared, because the overall sentiment for that asset might flip. This is the imbalance. If we go below that imbalance area, that bull market energy ceases to exist and we start moving into a more bearish swing overall for months. And remember, history doesn't repeat itself, but it rhymes. And what we're doing now is we went up, we crashed down, traded well within this Ichi boundary. We have a 2-week candle close below the Ichi. This is pretty much confirmation we are in a bear market. Even if we do get a little bit of pumps up, they are going to be dead cat bounces just to fix some RSIs and stochastics for a continued multi-month push sideways. Because once again, bull markets can last up to 3 years, bear markets can last up to like a year to a year and a half. We've already been going down since October. So I do think if we have a continued push into this bear market, it would be about 6 to 8 months. I myself, I'm not really worried about buying any alts right now. In the future, we're going to have amazing buys. And I can be confident in this because of what this chart did in the past and what I believe it will do in the future. Remember, the law of diminishing returns does state that we will never get pumps as good as the last pump before it, and we will never get dumps as bad as the last dump beforehand. So overall, I do think that this bear market is not going to be as crushing and it's not going to be as elongated as the last one. But you do have to watch your Ichis on the weekly to figure out when that sentiment flips. So when we do get that bear market extension, sooner or later, this Ichimoku will thicken itself out and we'll start trading into it. Ideally, you want to be buying or you want to be longing for those god longs beforehand. But there will be a moment where you break that Ichi and you start fucking ripping. You will get that beautiful, perfect top blast position. So as far as right now, it does look like we do not have a Ichi near us at this point. Barring a fuck ton of volume to take us up through here, we're not going to go bullish again. We do need to break above 100K and get clear 111 to even bring bullishness back to this market. And if we do want to hope, we're going to need a little bit of a consolidation sideways. We're going to need this Ichi to build a nice little base and start printing itself lower so we know that the resistance is building in an area that we can break and then start the next little rip up, because that's usually what happens. We go sideways for a little bit, we trade well within the Ichi, we break the Ichi, weekly Ichi, and then we start using that Ichi boundary as the bounce for the bull market. As far as right now, there's nothing anybody can tell me that we're not in a bear market. Basically, anybody hoping for alt season for the next 6 to 8 months, get fucked. Those of us that have money on the side, that have been saving, that have been through the bear market before, we're waiting for times like this. Remember, bear markets are how wealth is made. Most people ask me, what should I be buying in these regions? Because they see green and then their greed and retardation takes over. Why do you want to be buying in these regions when the crypto gods are now finally giving us sales? And you're going to use this push under the weekly Ichi to always figure out areas you can buy. And one of the ways you can figure out how to buy in conjunction to being under the weekly Ichis, to use your weekly stochastic and RSI to your advantage. See here we have broken RSI, broken stochastic to oversold side. You could have bought a little bit right there, and then later when a bull div formed, you could have bought again right there and then held a little bit and watched your profit go up. This last little area when we dipped down 59k, would I have put a little bit of money into this market? Yeah, but overall I would like to wait until we do print a bull div, because it'll be a better place to start putting money into the market. And that could take anywhere from 3, 6 to 8 more months. Overall, you do use the weekly to gauge your sentiment, especially for crypto and for Bitcoin. Remember, below its weekly Ichi, bear market. Above its weekly Ichi, bull market. So just to give you guys a little bit of a wrap up again, the Ichimoku not only tells you where the imbalance rests, it tells you where your support and resistances are, not only in the present, but in the future as well. And it can tell you the sentiment. It's a very, very handy tool. It's probably one of the best indicators I've ever used. Just remember, using the Ichi at first might be a little bit confusing. I highly recommend just putting it on your chart at first. Watch this video a couple times. You're probably not going to get it. Once again, indicators are like, especially with most things when it comes to learning in crypto, you don't really understand it until you start seeing it happen over and over again, and then it needs to click. So watch this video a couple times. I'm getting a little bit better at explaining things and getting cohesive, cogent messages out. I hate making videos, but I'm getting better at it. Hopefully in like a year from now, I could always remake this video or redo it. But just to summarize everything, the way Ichis work on any respective time frame, and all of this logic can be transferred to the time frame above it or a time frame below it. Just smaller time frames, smaller movements, higher time frames, higher movements. If the price is above an Ichi cloud and it's bouncing above it, we're more bullish. If we're riding the baseline to the top, it's more bullish. If we start breaking the baseline, that's kind of your first area to figure out, oh, there might be a swing. You break below an Ichi, you break below the imbalance area. Now, if you break below one time frame's Ichi, you're probably going to retest another time frame's Ichimoku. So it always helps to like switch through your time frames, see where the Ichis rest, see where they're all reacting with each other. Like I showed you on the daily, we do have an Ichi above on the daily. So if we go up, we have some immediate resistance above us. But if we go down on this 9-hour, we have some immediate support below us. Remember, if the price is above an Ichimoku, the Ichimoku is acting as support, with the leading span A being soft support and the leading span B being hard support. If we break that, it is a lot more bearish. Being inside of an Ichimoku tends to be a little bit into the danger zone because price likes to get a little zigzaggy in there. If we can continue to bounce off this range, it's a little bit more confirmation we're bullish. If we break into it, it's confirmation that we're bearish, and then we'll most likely follow this little range down. The longer you start watching it, the more you'll start seeing all of the reactions. I love the Ichimoku on the 27-minute. The baseline is absolutely goated if you ever take a short and you don't know whether to like TP or where to set your stop loss. The 27-minute Ichi baseline, TP there, set your stop loss. Oh, it's beautiful. The 51-minute Ichi is also fucking amazing, especially when a leading span B is resting on top. I can't tell you how many times I've seen the price go up, touch a 51-minute Ichi leading span B, and then reject. Also the same with the downies as well. We go down, we bounce off the leading span B on a 51, and then boom, we go up. So the 51-minute leading span Bs, especially when they plateau, are super important. You can see a lot through a 3 hour. Right now on the 3 hour, we've been doing nothing but flat riding and Kumo flipping for a while. Ichis are not very useful in a chop market. Ichis are way more useful when the market has volume and trend, because those are all the areas in which the market's going to go to in the future if the market moves with volume. So just remember that if we do chop or we're stuck in a chop market, Ichis become a lot less reliable than maybe your Watsons or your EMAs along with your RSIs would be. If you do start adding the Ichi into your strategy, you start watching it, you start using it as, you know, your equilibrium indicator. You start using it in conjunction with other indicators for confluence. You can start finding amazing positions, and it could really be the one thing that can start leveling up your trading. I can't tell you how many people I've showed the Ichi to that they had no idea this thing existed, and once they started using it, they got a whole lot better. There are a couple things that I do with the Ichimoku that are a little different. I do not use the conversion line or the lagging span. I feel like a couple times in this video I've accidentally said the conversion line when I meant baseline, but I turned the conversion line off. The conversion line is not needed. I use EMAs, and then the 9 EMA works so much better than the conversion line. The lagging span, I don't use either. I understand it can help figure out whether or not you're in an upward or a downward trend. But for the most part, whatever job a lagging span could do, a Watson comes in 10 times more clutch. But what I do keep on is a baseline, the leading span A and the leading span B. You can turn off the Kumo upper and the Kumo lower because like you don't need it. Just make sure that you put the leading span A, something you can associate with like a less bearish color than the leading span B. Leading span B is important, because that is when the imbalance happens, once the leading span B is either broken above or broken down below. So for me, I keep the leading span red. And you can see whenever the cloud has a Kumo flip color that the cloud will either be gold or red. Normally Kumo flips that have a gold top, you kind of want to bounce off of it and it'll continue. And then Kumo flips that have a red top, you want to keep that as support or else it breaks down a little harder. So that's good. We pushed up, we bounced off of this one, and hopefully we can keep the top of this without breaking into this for an extended push down. So if you watched my last video on learning how to trend and recognize support and resistances, and if you didn't watch that video, go give that video a watch. That is the bread and butter of how I trade. You always have to identify your important zones, your important lines, and you do that with higher time frames. But once you do that and you have your time frames mapped out in your ranges, you know which areas you should look out for, and you start slowly adding those indicators, that's when your plan starts showing itself. Now, I always say no indicator will ever show you when to enter a trade, but you could use them to your advantage. Like for instance, if I enter and then I see the price go down below this Ichi baseline, I know that maybe I have a better chance of making some money. And as you do figure out a nice little mix of indicators that you can use, you then create a good strategy. As you can see, most of my areas that I have lined up all line up with important zones. So the more you do this, the better you'll get. Don't, at first it might be a little discouraging. Put your ideas out there. If you're part of the Discord or are going to be part of the Discord, I highly suggest start charting, start adding 1 or 2 indicators. Actually, you should definitely be starting with RSIs and stochastics first. Once you get those down, start adding a little bit of indicators to your chart while you understand volume flow and everything. Little by little, you'll start getting a little bit better. You'll start getting into the groove, understanding how you like to do things. Remember, there's many different ways to learn how to chart. There's many different ways to learn how to trade, figure out what works for you, and master that shit. So this has been a little introduction video into the Ichimoku. Hopefully you got some positive information out of this. For those of you guys that liked the video, please give the video a like. And if you haven't subscribed, subscribe. Hopefully we can get some outreach out on this video and somebody that could use some help can get it. If you are not part of the Discord, you're doing yourself a disservice not joining the Discord. It is 100% free. It costs you absolutely nothing. There are 0 paywalls and a lot more value in my Discord than 99% of other Discords. Not only that, but I go live on Twitch every day. All my links will be in the description below, so make sure you follow on Twitch if you want to watch streams during the week. We can catch some good positions on stream, and if you're also in the Discord, you can come into the VC, and that's where we do some more hands-on trading. On top of all of that, to anybody that's in the Discord, my Biscuit Box homies, what's up, homies? I appreciate you guys for watching the video, and we are almost at 800 right now. Small but mighty. Remember, 99% of traders are losing traders, and the 1% of winning traders are in the Biscuit Box. If you guys have any questions or need any help, remember my DMs are always open. I will never DM you or friend request you first. But if you do need help, a closed mouth does not get fed. You are more than welcome to hit me up in the Discord and ask. Yeah, if you guys have any questions, comments, or suggestions on the video, leave a comment in the space below. Do all that YouTube shit or whatever. I will see you in the next video. Peace out. I hate making videos.